We are watching this trade story with China closely this morning. The U.S. and China apparently have agreed to roll back tariffs as part of a phase one trade deal. The two sides, and this is coming from the China Foreign Ministry, the two sides said to be eyeing a December signing date now on that phase one deal. Joining us right now to talk markets and what's important is the CEO of ETF Trends, Tom Lydon. And Tom, it's always a pleasure. Good to see you.
Good seeing you, Maria.
Where are you seeing the flows right now in terms of moving into stocks?
Well, obviously, investors aren't really that affected by the trade wars because markets are hitting new highs. But this bull market that we've had over the last 10 years, there's a big shift on. Recently, we've seen more money going into value than growth, and actually more money going into international stocks when you check fund flows and ETFs versus domestic. And it sounds right. Investors are looking for value where P's are almost a third off U.S. versus global. And when you look at value, a lot of stocks have been beaten up in the last 10 years. There's some great opportunities there.
Where internationally do you see the flows?
Well, you're seeing Europe, for example. Brexit has just been that cloud hanging over everyone's head.
Yeah.
But investors have to continue to invest. Companies are still doing a great job from a profitability standpoint, and compared to higher prices in the U.S., they're much cheaper.
What about small cap stocks? Where do they stand now?
Yeah, absolutely, Steve. They have underperformed in the last 10 years, and now we're starting to see a little bit of nibbling going on. Not as much flows in the small cap area that we'd like to see. I think that's probably going to pick up. As you know, things always revert back to the means, and small cap stocks tend to outperform large caps over time. But that hasn't been the case in the last 10 years.
That's true. Tom, let's just say, the tariffs and trade wars aside, that's obviously brought some volatility, but we keep reaching new highs. Talk about the Fed. They've been incredibly accommodative this year after, I think, making some mistakes last year. So we've had 3 moves so far, but there's an expectation there's not another move coming. And people have been pulled into the stock market with these lower rates. Now, if we kind of have a neutral stance, what do you think happens with people coming in, new money into the market?
Yeah, well, they haven't got hurt by going into equities, and I think that's part of your point. On the other hand, you're not getting paid to go into bonds right now because the yields are horrendous. So really, when you look at it, if people are shopping around, getting back to the original point, if you're looking for value stocks in the U.S. are really attractive because of the disparity between growth stocks and value stocks from a PE standpoint has been the worst that we've seen in 30 years. So again, that gap will close. And then when you look at opportunities overseas, most investors have had this huge home country bias, and their portfolios are so much correlated to the S&P 500. As we know from a diversification standpoint, that's not always going to hold. So investing overseas, emerging markets, for example, there's a lot of opportunity on sale.
What has been the impact of the zero commissions?
That's great, Maria. It just makes it easier. So when you look at your brokerage platforms, your Schwab, I just got back from San Diego yesterday, the Schwab International Advisor Conference. It was great because advisors now can invest their clients' money for zero trade, zero commissions, stocks, ETFs. When clients see little trade commissions in their portfolio, that doesn't make them feel good. Now it's down to not only low-cost ETFs that are a fraction of what mutual funds are, but also not trading. It gives them that added confidence. So all this has been so much better for the average investor.
And emerging markets over time, don't they usually end up doing better despite the roller coaster aspect of it?
They do, Steve, absolutely. And it's one of those things where a lot of folks, smart people on Wall Street, have been betting on emerging markets in the last 3 years, but it's been tough to beat the S&P 500. And that's the thing. Eventually, that will come around. One example is you look at Greece. And it's not really an emerging market, but it should be considered emerging market. It's up 45% year to date.
Yeah, coming from such a low level, dude.
Yeah, but I mean, some people have lost their shirts. I mean, when you say roller coaster, I mean, I remember Vietnam was a hot trade a few years ago, and so many people got blown out. So can you say where specifically you like right now for EMS?
Even though we've had this tension with China, there are going to be some great opportunities with the A shares over in China. India has been really, really strong, and there's some great opportunities.
And they just cut taxes there in India. Look, I want to take you back to the U.S. We've had a very strong earnings season, although, well, I don't want to say very strong as much as better than feared, that's for sure. Today we're waiting on Disney, expected to report after the bell tonight. Your reaction to the earnings season so far, and how that's sort of supporting this market?
Well, 70% have outperformed expectations, and I think that's been consistent. The thing I think we're very comfortable with companies these days, they're being more honest than ever. So less surprises, more confidence for investors.
All right, we'll leave it there. Tom, it's great to get your insights.
Great seeing you,
Thanks
Maria.
so much.
Thank you,
Tom
folks.
Lydon joining us there.